Welcome to IETV. My name is Rudy Mazzetta. I'm with Investment Executive. And I'm here today with Terry Ritchie, cross-border tax specialist. Hi, Terry.
Hello.
Given the number of recent U.S. tax changes, primarily FATCA, we hear there are a lot of U.S. citizens abroad or outside of the U.S. in Canada considering expatriation. Why is this?
Well, I think primarily many believe it's an easy out. They believe that if they can go ahead and renounce their citizenship, that they would not have the obligation to have to file U.S. returns, be subject to these relatively onerous rules. The problem is it's not an easy out. For individuals that do go ahead and renounce, it's a process. It's not an easy process. The consulates are backed up in terms of appointments to go ahead and go through this process. And then there could be some significant tax implications if they renounce as well. For individuals that consider renouncing their citizenship, they can be defined as what's called a covered expatriate. And a covered expatriate is somebody that has a net worth of more than $2 million, a worldwide net worth more than $2 million. Somebody that has an average tax liability of a little over $150,000 a year. It changes for inflation over a 5-year period of time. And lastly, if the American has not filed 5 years of previous tax returns, which in many cases is the traditional American in Canada, then they would be defined as a covered expatriate. And if they are a covered expatriate, a CE, then the CE has to go ahead and be subject to some rather onerous tax implications. The first is that they would effectively a deemed disposition tax. Under the law, the U.S. law, it's called a mark-to-market tax. And they would be deemed to have sold all of their assets at fair market value and pay a capital gains tax in the U.S. There's a fairly healthy exemption of $680,000, but beyond that, they would pay a capital gains tax. The second implication would be a tax that could be levied on their RSPs. Any qualified assets or tax-deferred vehicles in the U.S. or Canada would be subject to a 30% withholding tax. So that can be a bit of a problem. There's a tax burden that could come from this process.
There are also other elements involved with expatriation. You have to actually, from what I understand, visit the consulate. There are other elements of expatriating. Could you speak about that?
Yeah, so you have to fill out a specific Department of Homeland Security form. It's called the DS-4079. You fill that out. You then have to set up an appointment with the consulate for your interview. And again, given the number of people that are expatriating, there's a bit of a backlog on that. I've talked to people. Some people have had an easy process through this clients. Some people have found it rather intimidating. Giving up the greatest gift in the world from their perspective is not an easy undertaking. But once you've renounced, then you've got to wait for what's called a CLN, a Certificate of Loss of Nationality from the State Department. And until that CLN arrives, you are still a U.S. citizen. Once you get the CLN, then you would file what's called your expatriation return. So your final return would be a 1040-NR, a non-resident return. You'd pick up your worldwide income up to the point that you've renounced, and then you'll file what's called an 8854 form. It's a statement of your fair market value of all of your assets as of the date that you've expatriated, forgive me. And then you've certified, again, that you filed the previous 5 years of returns. And then the tax implications could exist at that point in time.
Right. And in your experience, do many U.S. citizens in Canada choose to expatriate?
I've spoken to hundreds of folks about this, and typically the deal breaker in most cases is going to be for lifestyle reasons. Last year, for the 2013 tax year, just 2,999 Americans expatriated. So the numbers are getting bigger, and likely it's because of the response of the tax laws. The single most well-known person that expatriated last quarter was Tina Turner, because every quarter there's a Federal Register published by the Department of Treasury where you can see the names of the people that expatriated. The implications here, though, are that proposed legislation is there, part of the proposed immigration laws, that would ban anybody from returning to the U.S. under any circumstances whatsoever if you expatriate. So from a lifestyle perspective, if you want to return to the U.S. and see Donnie Marie in Vegas or visit family or friends, that's going to be compromised by virtue of the passing of this law.
Wow. Thank you, Terry.
My pleasure.
And thanks for joining us on IETV.